Hey, good morning, all. Tuesday, 25th. Getting towards the end of the month. Bumper day yesterday in stock markets. I've been calling them lower for quite a long time. We've been getting into short positions at some excellent levels. And of course, the Emini S&P hit my target of 4,200 or got very, very close to it. So if you manage to run that position for 400 points or close to it, even 350, I would say that's been a fantastic few days for you. I've got some great feedback from people who have been following the trades, so I couldn't be happier doing my job there of helping you make a decent living, I hope. We'll look at that in a minute. I've got gold up because I've been moaning about gold, but you know the levels that I have been working. We had support down at 1830, 1825. That was yesterday's low. A good run off there yesterday. We can only really just scalp the levels, keep trading it. I'm wary of that big trend line that we have here above in the sort of low 1850 area. That's definitely going to be key. If we can get up through 1855, everything looks good. But for the moment, that's definitely the area that's holding. But of course, the support down at the mid 1820 area is definitely doing a good job too. So, you know, scalp those levels. If you can get to 10, 20 points out of it, why not? Right, let's quickly move over to the stock markets because that's where all the action is happening now. Let's try and decipher what's going on. So we got close to 4,200 on the Emini S&P. The cash, the futures got to 42.12. The cash got to 42.21. The cash index is trading about 10 points above the futures, has been for quite a long time. So now as we zoom in to that Fibonacci confluence of support, you can see the buyers came in very aggressively. They really pushed the market up significantly. We even closed up on the day. Now that's something that I would not have expected, but I'm certainly glad that I had the 4,200 target and hoping that everyone took their profit down there. Now the bounce met resistance from the 500-day moving average and the fib resistance all around the sort of 44.40, 44.50 area. We didn't quite get there, and we've rejected that resistance and we've come back down. Now, normally I'd be saying, right, that is a big bullish candle. The hammer really does look very positive. That really should be the end of the stock market dump. We know we're getting into oversold territory on the daily chart. This really is a buy. That was the buy the dip opportunity, and we should now continue in the bull trend. But I'm not going to say that. For some reason, I don't think that is the case. I think it's probably because we've held this first resistance level so easily and we're already drifting back down. We're already almost 100 points below that. We've got moving averages just starting to turn south. We've got the 4-hour chart with moving average crossovers. I don't know. I'm not feeling it. This is more of a subjective sort of, this is more of a gut feeling than what the charts are telling me. But I do rely on that sometimes. I've been doing this 35 years and my gut instincts usually are right. So we will see. Am I right? Am I wrong? Should I be paying more attention to that bullish candle from yesterday? And which indicates that just on that the stock market dump is over. Or do I rely on my instincts? And I think we get a retest of that. And I think eventually we'll break lower. Okay, that's all I can say. You know, that's gut feeling versus pure technicals. Let's have a look at the NASDAQ. Now, the NASDAQ also fell to a decent support level down there, well to our targets, and it's bounced again. Nice bullish candle, but no follow through. A red candle at the moment, you know, early on in the day, doesn't look too good. So again, I'm just not feeling that the bulls have control yet, and they really should have, because you know, buy the dip has always worked. I just feel there is a bit of a sea change. I feel there is a bit of a change in sentiment, and I just feel the bears are getting the upper hand, and I just wouldn't feel confident in a long position right now. Again, Dow Jones, well, okay, don't know what's going on there. Again, the trend line caught the bounce. You see that trend line. Once that trend line was broken, we plunged, but the strong bounce, there clearly were buyers coming in yesterday. There clearly were buyers at decent support levels ready to commit money, but as soon as we bounce to the resistance level, it's come back down again. So I don't know. Gut feeling is we're going to test the lows again, at least test yesterday's lows, and I wouldn't be too confident in them holding. Okay, I'm not really going to go through the currencies because there's nothing really that's catching my eye. Yesterday, sorry, not the Aussie New Zealand. I want to look at the Aussie versus the US. Okay, so there was a breakdown in the Aussie, which gave a bit of a sell signal. It was actually not that trend line at all. Let me get this on the screen. That trend line is not the one I was looking at. I'll leave that on actually. It was, where are we now? It was this trend line. Once this one broke, that was the sell signal, broke all the moving averages, broke the trend line, kindly revisited the trend line there, as you can see. That happens so often, doesn't it? Oops. That happens so often. You get the break and then the market just very generously retests the break point so you can jump into a short position if you didn't manage to do so the first time around. Let me get back to where I'm supposed to be. I want to be doing this, and I want to be doing that, and I want to be doing that. Okay, that's what I want. Now then, even now we are returning to the break point. It's tricky because look, I've talked about this already. The moving averages are flatlining. It's just not really helping me. It clearly is showing that the markets are just trading sideways. The euro isn't really doing anything at all, holding that trend line. But even if you're buying at the trend line, it's just not giving you the bounce that you'd want for the risk that you're taking. And this is why I'm not particularly focused on currency markets at the moment. I can't find a clear theme for the dollar. Aussie, where's the New Zealand versus the US? There we go. That broke down yesterday. So that was okay. Broke the previous low, broke the trend line here. But they just, when you compare to what's going on in the stock markets and the profit potential that we've had, and well, I'm pretty sure that we've all capitalized on, you know, I'm not really bothering to worry about trying to make 50, 60 pips in a currency pair over 2 days. So that's why I'm not focused on it. But that's my job, to give you some great trade ideas, to explain the analysis to you. Hopefully you can learn a bit while I show you what's going on, and while I hopefully get you into some profitable trades. But anyway, I just wanted to touch on that and explain to you why my focus on the Forex markets has turned, and I'm now certainly more focused on the stock markets, which I'm very sure that you are very pleased about, because there really have been some bumper profits. All right, I'm just going to swing back to the S&P on the 4-hour chart. Let's just have a look at the 1-hour chart. The S&P is the one I'm really focused on at the moment. Don't know why. I know a lot of you from the feedback, you're trading the NASDAQ, and that's been a great market. Even bigger point profit on that. On the 1-hour chart, look, even on the 1-hour chart, look how we got to the 200-hour moving average, or is that the 50? That's the 50-hour moving average, and just came straight off it. The first hurdle, really. First hurdle, it just emphasizes to me that this really is a bear market in development. If you can't even get through the 50-day moving average on a strong bounce, that was just, you know, a net that caught the bounce, then I just really think the bears are in control of this market, and I think we've got further to go to the downside. Panic could really set in. We'll see if I'm right. Maybe you disagree with me. If you do, send me a message, send me a comment, and it would be interesting to hear different views. Okay, that's it for today. Let's catch up again tomorrow.